This is our Forex blog for May 3rd, 2012, and I had internet issues today, so I'm going to do the class from around, pretty much last night and midnight up until about 9:30 or 10 today. This is our currency meter. It's one of the easiest ways for new traders to learn how to trade because it shows you what direction each currency is going in, and we derive that by analyzing each currency against every other currency on multiple time frames using multiple different methods. Some of the methods show the percentage of dollar pairs going up or down, and other percentages that make up this weighting show the intensity of trend. So anytime the vast majority of, in this case, the yen pair right here, when you can see the blood red right here, way over the 80 level, not only is the yen going down against 80 to 100% of the pairs, but it's also doing so with incredible intensity. And underneath that, we have the percentage of currencies, in this case the yen, going up or down on the 15-minute, hourly trend, and also daily, weekly, monthly. So the daily trend shifted down right around 8. The weekly, monthly trend of this one was up. But you can see anytime, if you're going to go against the longer-term weekly trend and monthly trend, and sometimes even a daily trend, make sure that the percentage of currencies going up or down on the 15-minute trend is at least pretty dark red, which you can see it was here at 8. So what was, one of the stronger ones? A little bit after 8, you can see right around here, 841, 843, the euro became really, really strong. And even before that, the CAD was strong most of the day. And you can see that the yen was, for the most part, weak the majority of the day. The percentage of pairs were underneath their hourlies and 15-minute moving averages, very high percentage of them. So most of the trades you want to take earlier in the day was the CAD yen. You want to buy the strong CAD, weak yen. You can see this pretty much went up from 81.30 to 80. Volatility's been really low lately. And one thing you'll notice on this chart is when it gets to the upper containment bands, and also one of my Fibonacci areas that I spend 30 or 40 minutes each night doing on longer time frame charts, these are very key support resistance areas. Anytime there is a fib area, especially at or above the white containment bands, and if you get a double top like this, typically that's the end of the move. It's going to pull back, and typically it goes right down to the hourly. So if you're a really aggressive counter trend trader, when you spotted that double back, well, actually this is kind of a mini double top. It actually forms kind of more of a triple top, but if you had shorted here, you can see it did pull back 15 pips, more than enough at the very minimum to move your stop to break even or catch 5 or 6 pips on this. And then when it went up again, and you can see the statistical strength fell off a cliff right here, there's pretty high probability place to sell. Anytime you have a false breakout from below to above, the dotted green line is the previous day's high. That in and of itself is major resistance area, but when it's combined with the 10-day moving average right here, the Fibonacci area, this is major resistance. It's not likely to explode through there, especially being at the upper or very near the upper containment band. Earlier in the day, you can see the Australian was pretty weak. Not off the charts weak, but the percentage of Australian pairs going down was pretty high. The daily, weekly, monthly trend was down, and the dollar was strong. So, without a doubt, the dollar was strong. So, as was the CAD. So you could have sold the weak Australian against a strong dollar or the strong CAD. Let's first look at selling the Australian dollar earlier in the day. This one's underneath the hourly right here. Usually when it comes up to that area, it's a good place to sell. You can see it only pulled back about 10 pips. Volatility is pretty low today. Came back up and double topped right there, and the second trade fell from around 06 to 84. 22 pip move down. But when you know the direction of a trade, and I really like, nice 2 to 5, or actually 3 to 8 bar pullbacks, 1, 2, 3, 4, 5. First red bar, you sell it when it goes 1 pip underneath the low right here. Put your stop above here, and if you wanted to get out of this with half your trade with a 5-6 pip profit here, if you're scalping at the previous day's low and it's going sideways right there, you move your stop down to break even. Comes back down here. This is a monthly S1, major resistance area, and notice it's just not quite as weak down there. When it hits that level and comes up and it's kind of bouncing around down there, the statistical weakness is not that weak. That means at that particular time, the Australian pairs are not necessarily going down against other pairs. Not just against the dollar, but other pairs as well, and the intensity is not that strong. So you can get out of a trade that many Forex traders would lose money on with 5 to 10 pips small profit. But you can see the market did go down a little bit later, and it found support at my Fibonacci profit target level. The dark gray levels are Fib profit targets. The light gray levels are Fibonacci retracement levels. The CAD, without a doubt, is the statistically strongest pair today. So let's take a look at, and you can see later in the day, the Australian had a little bit of strength here and here, and that's what caused the up moves against the dollar. Let's compare the Australian against the CAD. And this, is a little bit bigger of a move, at least compared to this particular chart. You can see, you knew the direction. The Australian was the weakest. The CAD was one of the strongest. You have a nice little pattern like this. It broke from above to below the previous week's low, and then it came up to it and it couldn't get above it. That's not a bad place to sell. You didn't really make much on there, but your stop would have been over the high. You might have got out. I don't like to hold trades for this many hours without it going anywhere. Typically, I'll get out with a small profit, break even, or 5 or 6 pip loss, and then wait for the move to happen again. You can see a nice little flat top, upward sloped bottom trend line break right here, and it fell from around 55 to 15. It's a nice 40 pip move down. And if you missed the first move, a lot of times trend line breaks, when they break, they come up and do a retest, so you can also sell it right here. Nice sideways rectangle pattern right here. And these are all the potential entries into this trade. Once it breaks down here, it's fallen enough that this would be the second wave of the move. You draw your fibs on the first wave. And most of the time, somewhere between the first and second fib target. Sometimes it does go beyond the 1.618 fib, but the vast majority of the time, probably 70% or more, it doesn't go below this. So if it comes down there and you see the statistical weakness fall off a cliff, get out somewhere in here at 17. Maybe you would have been short somewhere at 38. You made 21 pips. And volatility has been lower than it normally has. But keep in mind, 10 pips per day doubles your account every 2 months, every 8 weeks. So a nice 20 pip move in less than half an hour is 2 days worth of minimum net profit that you should shoot for. So that, these are good trades. This one right here fell about 10, and then it fell another 10 or 20. So that's 30 pips worth of profit right there. You can see that the New Zealand was also extremely weak. So you had that choice too. You could have looked for sells in the New Zealand CAD. And of course this one also trended down nicely all day. It fell up here when it was chopping around here. Anytime you see a multi-hour, very low volatility rectangle pattern, and when I say low volatility, I mean if over an hour or two it's in a 10 pip range, or over 3 to 5 hours, 20 pip range. In this case, it was in a 10 pip range really for 1 hour, 2, 3, 4, 4.5 hours in a very tight 10 pip range. This is a very high percentage winning trade. And your initial stop would be just over the high here. Once it breaks down and goes sideways, there are such a thing as false breakouts. So if you see this and it's going sideways, I'm not going to keep my stop up there. I'm going to move it down. Because if I get stopped out, that's fine. I can always sell it again when it breaks down underneath here. And this one, barely went down. At this point, I wouldn't be so sure of the trade either. So anytime it goes sideways, you yank your stop down, goes down again. And at that point, that's enough of a move that you can draw your fibs on. And somewhere between the first and second fib target is where you're going to get out. If it comes down in here and goes sideways and you see the weakness disappear, get out of your trade. So maybe you got out right here at 96. You would have been in this trade up here at 38. So you made a little over 40 pips. That's almost an entire week's worth of profit in one trade, using your currency meter to spot the most likely trades. Now also the Australian was weak later in the day, and the euro became extremely strong, so did the Swiss. So I'll end class today by looking at the euro Australian buy, and you can see just explosive move up. Remember, I lost internet connection earlier and I didn't reset the e-signal, so it stopped recording. The data's out. And so that one exploded up. You also have the euro, or I should say the Australian Swiss is a good one to sell. Notice when this broke down, just exploded, 10, 20. Actually, no, that's not. Those are 5 pips. So 10, 20, 30 or 35 pips or so of movement down. And it very quickly showed up on our currency meter. And you can see the real-time trend shifted, then the 15-minute percentage trend shifted, the hourly The daily was already slightly up before that. However, the weekly and the monthly trend slightly down. But again, if you're an intraday trader, you don't really need to worry about the weekly and monthly. I would prefer the real-time trend to be up or down, and then have the 15 and hourly match that. Then you have a pretty high probability of a winning trade, and on trend days you're more likely to get much bigger wins. Low volatility days like this, with a few exceptions today, there are very tiny, 15 to 25, 30 pip moves max. But a couple 5 to 10 pip wins will add up.